Ever looked at the stock market and thought it was some exclusive club you weren't invited to? Well, I'm here to tell you that's not true at all. Think of it less like a secret society and more like a giant online marketplace where you can own a tiny piece of your favorite companies. That's all a stock is, a small slice of ownership. If the company does well, your slice becomes more valuable. If it doesn't, well, the value can go down. It's that simple, really. So, how do you get started without feeling like you're gambling away your savings? The key is to start small and think long term. Forget trying to get rich overnight. Real investing is more like planting a tree than winning the lottery. You plant a seed, you water it, and you give it time to grow. You wouldn't check on a sapling every 5 minutes, right? Same goes for your investments. Let's break it down. First, you need a way to access this marketplace. This is where a brokerage account comes in. Think of it as your personal shopping cart for stocks. There are tons of user-friendly apps and websites out there that let you open an account in minutes, often with no minimum deposit. So you can literally start with just a few dollars. Now, what to buy? This is the fun part. Start with what you know. Do you love your smartphone? Maybe look into the company that makes it. Are you always ordering from a specific online store? That's a potential investment. The idea is to invest in businesses you understand and believe in for the long haul. You're not just buying a random ticker symbol, you're becoming a part owner of a real business. A fantastic way for beginners to start is with something called an ETF or an exchange traded fund. Imagine instead of buying one single stock, you could buy a basket that contains hundreds of stocks all at once. That's an ETF. For example, you can buy an S&P 500 ETF, which gives you a tiny piece of the 500 largest companies in the US. This is a brilliant way to diversify your investment immediately, which basically means you're not putting all your eggs in one basket. If one company in the basket has a bad day, the other 499 can help balance it out. Now let's talk about the big scary monster, risk. Yes, the market goes up and down. That's normal. It's called volatility. The secret weapon against volatility is time. Historically, despite all the crashes and recessions, the stock market has always recovered and trended upwards over the long term. That's why you hear the phrase, time in the market beats timing the market. Trying to guess the perfect day to buy or sell is a loser's game. A much better strategy is called dollar cost averaging. This just means investing a fixed amount of money at regular intervals, say $50 every month, no matter what the market is doing. When prices are high, you buy fewer shares. When prices are low, your money buys more. Over time, this smooths out your purchase price and reduces the stress of trying to time things perfectly. So let's recap the beginner's game plan. 1. Open a brokerage account. 2. Start with what you know or consider a broad market ETF for instant diversification. 3. Invest consistently, even if it's just a small amount, and think in terms of years, not days. The goal isn't to become a Wall Street wizard overnight. It's to build a habit and let the power of compounding work its magic over time. You're not just buying stocks, you're buying your future freedom. It's a journey, and every journey starts with a single step. You've got this. Thanks for watching, and if you found this helpful, give that like button a tap and subscribe for more simple guides to building your wealth. See you next time.